Hey, welcome to Financial Friday. I'm Jason Wells, the Arizona Real Estate Pro here. I've brought in Nick Heth here. Nick Heth is with People's Mortgage. He has got a whole bunch of answers that he can bring us about the mortgage industry, lending, stuff like that. And today we were talking that it would be great to bring everybody some information on why it's a great time to buy right now. With even, from a real estate side, you talk to a realtor or a real estate attorney like myself, we're going to talk about the fact that, the market's starting to stabilize. There are some indications that maybe it'll still keep going down, but what does that mean from a financial side? So Nick, what are you seeing that's a reason for people to buy now?
I think two big reasons to buy right now. One, the selection. You're going to have your choice of houses. You're not going to be subject to what's available. The demand is lower than the supply, so you're able to get your pick of your house. You can get a brand new home that's never been lived in for a very low price. So I think that's number one, which is kind of your side of things.
Plenty of inventory.
And then the other thing is interest rates being low. The way that sellers are helping buyers get into homes. So, a 4.25% interest rate right now on an FHA loan, combined with the seller paying all your closing costs, lets you get into the house with just the 3.5% down. I think those are the two big reasons to get in right now. As well as you compare what you're paying for rent versus what you can get into your house payment for. You're finding a lot of clients to be able to lower their payment and own a house that's going to be bigger than what they've been renting. So I think those are the big reasons to buy right now.
Well, maybe explain to the viewers why, because I think a lot of people may not understand, this idea that I can rent. Previously, people go out and rent because the idea was I can get a bigger house. It was bought at a lower price, so I'm paying less for more house. But right now you're saying that a lot of times with the interest rates the way they are, your payment's actually going to be lower for more house, more yard, more of that American dream than your current renting situation. Why is that?
I think it goes back to the supply and demand. Right now, the supply of houses that are available through foreclosures and short sales, as well as private, sellers, they want to sell their house. They want to get out from under it, whether it be the bank or the investor or the homeowner themselves, saying, "I bought this in 2006, and now I need to lower my payments per month. I need to get out from under this house." So it just kind of goes back to that supply and demand matrix.
Yeah. If you look at across from the real estate side, if you come and you talk to a real estate professional, what they're going to tell you is that housing prices, the purchase prices are going down, but rents are staying steady or even going up because of the large demand from a lot of these folks in short sales who they're leaving a house, they don't want to go all the way down to an apartment, so they're looking to rent as well. So rent rates are actually going up while the price of ownership is coming down. So if you're in a position where you've been thinking, I don't know if I'm ready to move, maybe the market's not quite stable enough, I'm going to tell you, you can check out some of our other videos where we talk about how the market's just about as low as it possibly can go on the fact of buying, the materials to build the house. But if you're going to get into a home now, the prices that you're going to pay with these interest rates down around 4%, you've talked about.
Anywhere from 4 to 4.5% is where I'm finding most of my clients' interest rate. And then how you structure that deal is something that we can talk about, or that I talk to my clients about. It's extremely low interest rates, and it's just math as far as what your payment is. $150,000 house is going to get you a nice house these days.
Really nice house these days.
Absolutely.
And what's your payment roughly on?
Good morning, Keller Williams. It's time for Power Hour. So all you great salespeople, come on in and join us. Power Hour time.
That's what we do every morning. Power Hour here at Keller Williams as well. But as you were saying,
on a $112,000 house, you're looking at a payment, less than $800. On a $150,000 house, you're looking at a payment less than $1,000. And if you look at a 3-car garage, 4-bedroom house, what would you pay to rent that house?
Yeah, a lot of times you're going to be seeing upwards of $1,300, $1,400 to rent these places. Anywhere from like 11 to 13, 14, but you can own the place
and start to build equity. I think that's important, because now 5 years from now you've been chunking away money. It's like a savings account or a big piggy bank, but you also get the ability to use the house as well. So extremely good time to buy.
Absolutely. So if you have any questions about anything financials, what you can do, what you need to start looking at to be putting yourself in a situation to be able to buy, give Nick here a call. His information is going to be listed here below, as well as his email. Give him a call, talk to him. He'll be happy to answer any of your questions. Same thing, if you'd like to start looking around for a house, give me a call. I'd love to help you. So until next Financial Friday, thanks for tuning in.
Have a great one.